This video is a review of Shin-Etsu Chemical's fiscal year 2024 full-year financial results, period from April 2024 to March 2025. Shin-Etsu Chemical is Japan's largest chemical company with a market capitalization of 8 trillion yen. Shin-Etsu Chemical holds the top global market share for PVC, polyvinyl chloride resins, and semiconductor silicon. The company has a significant international presence, with manufacturing facilities in other countries. General overview. During fiscal year 2024, while the U.S. economy remained generally strong despite the Federal Reserve Board lowering its policy rate, new tariffs and other policies from the U.S. administration led to a noticeable decline in personal consumption and business investment. Meanwhile, Europe implemented monetary easing measures, and Germany introduced a fiscal stimulus package, raising hopes for economic recovery. And although China finally began economic stimulus efforts, exports remained stable due to government-driven oversupply amid growing geopolitical risks from increased trade frictions. Under the circumstances, Shin-Etsu maintained close communication with customers, ensured a stable and high-quality product supply, and conducted sales activities with agility, resulting in a 6% increase to 742.1 billion yen in cumulative operating income, and a 3% increase to 534 billion yen in net income, despite a temporary rise in tax expenses linked to dividend payments from overseas subsidiaries. Although Shin-Etsu did not reach the record-high profits of fiscal year 2022, they achieved higher revenue and profit compared to last year at least. Business segment overview. The majority of sales and income comes from the infrastructure materials segment and the electronics materials segment. In particular, polyvinyl chloride and semiconductor silicon wafers are Shin-Etsu's main products. Infrastructure materials segment. Net sales increased by 3% to 1,041.5 billion yen, but operating income decreased by 9% to 291.4 billion yen. PVC, polyvinyl chloride prices rose across major regions from April to June last year, and either further improved or remained stable afterward. Electronics materials segment. Net sales rose by 10% to 934.3 billion yen, and operating profit grew by 19% to 324.7 billion yen. In the semiconductor market, where recovery from the adjustment phase has been uneven across applications and sectors, Shin-Etsu has concentrated on supplying semiconductor materials such as silicon wafers, photoresists, and photomask blanks to markets showing strong growth. Repurchase of shares. Shin-Etsu has decided to repurchase up to 200 million common shares, roughly 10% of outstanding shares, for a maximum of 500 billion yen between May 21, 2025 and April 24, 2026, as part of basic policy to expand earnings, maintain financial discipline, return profits to shareholders appropriately and stably, and manage capital with careful attention to return on equity and cost of capital, taking into account share price levels and other factors. Additionally, Shin-Etsu prioritized shareholder returns by striving to provide stable dividends with a medium to long-term target payout ratio of around 40%, resulting in a planned year-end dividend of 53 yen per share and bringing the total FY2024 annual dividend to 106 yen per share, an increase of 6 yen compared to the previous fiscal year. Since Shin-Etsu Chemical will celebrate its 100th anniversary in 2026, some individual investors had been expecting a commemorative dividend, but unfortunately, no such announcement was made this time. Business prospects. Due to the uncertainty caused by trade issues, exchange rate fluctuations, and other factors, Shin-Etsu has temporarily decided not to provide a full-year business performance forecast for fiscal year 2025, as it is currently difficult to make a reasonable prediction. Shin-Etsu is releasing only the earnings forecast for the first quarter, from April 1st to June 30th, 2025, and will promptly announce the full-year forecast once it becomes possible. Year on year, net sales for the first quarter is predicted to increase by 2% to 610 billion yen, while operating income to decrease by 13.1% and net profit to decline by 16.7% to 120 billion yen. FY 2025 is expected to be a challenging year for Shin-Etsu. Stock price. This is the Japanese yen-based chart for the last 1 year. The Japanese yen stock price is 4,406 yen as of April 25th, and the US dollar stock price is $14.84 as of April 25th. Current PBR is 1.70, PER is 18.1. Dividend yield is 2.41%. Since the full-year EPS and dividend for fiscal year 2025 have not been disclosed, the current PER and dividend yield are simple calculations based on the first quarter projection and the previous dividend amount. Compared to the last few years, all PBR, PER, and dividend yield show that stock price is relatively lower. Stock price is still in a long-term downward trend, but slightly rebounded after share repurchases announcement. Current stock price is still lower compared to the past years. Conclusion. Since Shin-Etsu Chemical has relatively high profits from overseas operations, like many other Japanese companies, its future business performance will be significantly affected by changes in U.S. tariffs and exchange rate fluctuations. However, 500 billion yen share repurchase is a large amount, and it will enhance the value of each share, while the dividend amount has been steadily increasing in recent years, which is positive for shareholders. The annual forecast has not yet been disclosed, and Shin-Etsu's business performance will largely depend on market conditions. But the current stock price still appears to be at an undervalued level.